Okay. So, sorry. Remember that in our acrostic that we need, right? We got T, F, P, and D, right? So the T stands for trend. We know that. F stands for fibs. We got that. P stands for PSRs. We just did that. D, however, is divergence, right? All right. So divergence is a leading indicator versus a lagging indicator. Everything that's on the charts, oscillators, all that stuff, MACDs, RBIs, flow stochastic, all that kind of crap is all lagging, all right? But divergence is the only leading indicator in the chart. So divergence occurs when your price action is going the opposite way of your indicator. Now, all charts can show divergence, but we like the 1 hour since it's more reliable for imminent reversals, and number two, it's a big boy chart, right? So we use the 15-minute charts on a chart that has it's got candles, and that's, I don't know what that's messed up on. Hold on just a minute. I don't know why that is. Hold on. We use the 15-minute charts on the 6 aces. Wow, that's weird. And we change the 15-minute to 60 minutes. All right? So we use the MACD. MACD stands for moving average convergence divergence. Let me back that up again. Moving average convergence divergence. That's its only purpose is to show convergence or divergence. All right. So here's the MACD down at the bottom here. Now I can't use the MACD on the RF1010 screen. All right. So I'm going to pop over here to it, and I'll pull it up here, and you know, I'm down here on the Euro here, and I'll turn this to a 10-minute chart, and this MACD that is down here is a 60-minute. All right. This is a 60-minute MACD on a 10-minute chart. Well, that means I can't use that. All right. In order for me to do this, I got to go to a 6 aces, because this MACD is a 15-minute chart. There's a 15-minute MACD, and these candles are 15 minutes. I got to have apples and apples, or oranges and oranges. All right. So the MACD over here is to keep you in a trade. That's what its purpose is for you to have reticular cognition and recognize what the currency is telling you right here. But when you actually have to go look for divergence, you have to do it on a 6 aces chart. So let's go back in here. All right. So here's the MACD on a 6 aces chart. I have changed it to the 60-minute up here. All right. So you can see that the MACD is trending down. All right. The candles, however, are trending up. They're going the opposite way. That is what divergence means. Convergence means we're going together. All right. So where's convergence? All right. Hold on. I got it. I hate that when it happens, and I lose that thing. All right, there we go. Lost my drawer, that's all. Hold on. Still lost the drawer. Ah, got it. Hold on. Driving me nuts. Sorry. I'm trying to get this. Let's see if we get it this time. Dang. Oh, I hate this when this happens, Pip. I can't get my drawer. Oh, well. All right. So you can see the candles are trending to the upside, and down here they're trending to the downside. Now over here in this area, I don't know what it is. It's there, just it's above here. So some reason it's just not popping up. I've been using this PowerPoint all day, and all of a sudden it doesn't work. Right? Over here you can see the MACD is trending up, and the candles are trending up. So they were converging here. That means we're trending. All right. The problem is we need to know when we're not trending. So we always use the same piece of real estate. All right. Don't try to force feed it. It's the same piece of real estate, hump to hump. You have a hump down in the MACD and a hump here. The job of the MACD is to follow the candlesticks. When it can no longer follow the candlesticks, we're going to turn around and go the other way. So that was divergence. All right, now we're doing convergence. There was divergence. Now we're converging to the downside. All right, and I want you to see down here, the moving average is slower than the histogram. These are called histograms. And the moving average is slower. That's when we're making a transition from the up move to the down, the moving average will come out into the open and you'll be able to see it. All right, see that? All right, here's an up move. All right, always use the same piece of real estate. All right, so the MACD hump to hump is trending up. All right, the candles hump to hump are trending down. Divergence, which way are we going to go? Up or down? Up. Okay, good. Up. So we always use the same piece of real estate. We have divergence here. Now we have convergence to the upside. All right. So it's a heads up. Once again, notice that the moving average here, when you make the turn, it cannot make the turn fast enough, so it comes out in the open. All right. This is called the zero line break. We will mark this on your chart for you. When it breaks the zero line here, right in this area right here, you'll have a line on your chart straight up. Why? Because we're now officially converging to the upside or trending. You see that? Everybody get that? When you break this up here, the moving average moves into the histogram, you're officially trending. Wouldn't that be good to know since we trade in the trend? All right. So let's do a couple of these live here. All right. I got it. I don't understand why I lost that thing. Oh, yeah. Try it again. We'll see. All right, so let's go to the euro here. Piece of junk, the euro, but anyway, we'll see. All right, so I got to go to the 6 aces, all right, up here. Take everything off, all right, and go up to a 60-minute, all right. So here's what we got. Oh, I got draw now, hooray. All right. Candles are trending up. MACD is trending down. Which move can we anticipate? Up or down? Bearish, okay? Another thing I want you to see here, we're not going to talk about this, but it happens to be right here. That's a rising wedge, which is a sell sign. So we have a rising wedge and we have divergence to the downside. Expect the euro to go to the downside. Right? Here's the deal. The MACD wins every time. So statistically so high, you don't even count that it doesn't going to win. All right. So here's another one here. Here we got, all right, MACD trending up, candles trending down. Which way are we going? Up or down? Up. Exactly right. We're going up. There she is. All right. I want that one. Let's get off the euro. It's a piece of junk. Let's go to the Aussie. Love the Aussie. Love the Euro Japan. All right, here we are on a 60-minute chart here. And let's go back in the past a little ways. See if we can find some good ones here. That one just rolled over, didn't it? It scrunches a little bit. You'll see. Trending down, trending up. Which way are we going? Up or down? Up. Up. There she is. That doesn't look like much, but it's 200 pips, folks. Trying to find some really good ones for you. Of course, this is a real nice one here. All right. Turning up, turning down, going up. We'll move up, not much on that one. Boom. All right. How about this one? All right. Yeah, there you go. Down. See? All right. So down we go. All right. All right. Good question, Stan. here's the deal. We do not stop trading in the same direction we're trading in. We're just aware that that end is near, right? So as we're trading up here, we have divergence maybe in here, and it's still, well, we're still a buyer. We're still a buyer. We're still a buyer. Where do we become a seller? Okay, we become a seller when we take the bottom out and we take the support out. See that? So that part doesn't work. That doesn't work. Right? Breaking the trend. Now we're not there. Breaking the trend is the heads up. We got to take the support out first. Again, breaking the trend means very little. It's the heads up, but you got to take the support out. Right? Yeah, many times it could be a false breakout. Okay, so same thing here when you're coming down to the downside. Okay, let's pop it over here. When do we become a seller here? Okay, let's pop a trend on here real quick. I'm not trying to be real specific here. I'm just grabbing a trend. Not bad actually. Okay, so when do we become a seller? We break through here. Right? That doesn't mean anything. There's a support. As soon as we break that, right there, we are now a seller. Right? We're now a seller. We're no longer a buyer because this is going, you see this thing we're doing over here? We ain't doing that anymore. Right? So we take them at their word. So breaking the trend means nothing. Breaking the trend and the support, we're now a seller looking for the opportunity to sell. There it comes, there it comes, there it comes, there it comes. See? All right? Over here, you got the heads up. We're going down because we're trending down on the MACD. See that? So we don't continue to stop trading in the same direction, but we're much more judicious and quicker on moving our stops once we have divergence in the market. Right? Because you don't want to miss, you could have divergence in the market and it could go up 200 pips. Right? We don't want to miss those opportunities. But we know that we got to keep right behind it because at any moment, once it finds its target and is done, they're going to go. Right? And you can see in this case, that's exactly what happened. They decided to hit the top of the trend. It went. Well, see, they were already telling you that already over here. See, yeah, they're telling you we're going to go to down, we're going to go, boom. Right? Yeah, you use the 6 aces because the 10-minute chart. Remember, there's only one on this 10-minute chart on the Royal Flush. I mean, on this whole setup here. Right? The only thing on this chart that is 10 minutes is the candles. There's nothing else on here from the 10-minute world. Why? Because you can't trade the 10-minute world. You have to trade the big picture. Traders are lazy. So we have a 240-minute moving average. We got a 60-moving average. It defines the desert. We got a 60-minute moving average down here. The little moving averages you see running right in here, those are 30-minute moving averages right in here. 30-minute. The little ones that change color in here, they're 30-minute. There's nothing on this chart but the candles that are 10 minutes. That's it. Candles only, right? Which is another reason why we couldn't do it on MT4. How are we going to change the candles and have everything on MT4 60-minute or higher, and yet we're on MT4 and we got 10-minute candles? Couldn't do it. So we had to create charts that would do it. That's these. Right? On the price chart, you use higher highs, not higher lows. Don't understand the question. Depends on what we're looking for. Les, you talking about for divergence? Divergence depends on which way it's going. We're watching the movement of the MACD over in that 60-minute chart. The MACD's job is to follow the candlestick. As long as it's following the candlestick, we're fine. Right? When it no longer can follow the candlesticks, now we have a problem, right? Because that means it's going to go the other way. So it's supposed to be going up, right? Is the MACD going up like this? Is it doing that? No, it's going the other way. It's going down, which means that this is going to come to the downside. See? So it's not about these highs. It's what does the MACD do? Can it follow it? No, it can't. Therefore, the MACD is going to win. The MACD is what? Where is the MACD compared to the zero line? Okay, the zero line is the break down here. You get these breaks, and they come up through. And we do it over here on the Aussie, on the Royal Flush. You'll see the zero line break. Here's one right here. Right? See, we mark the zero line break right here. There's a zero line. We're now officially trending up because this is a 60-minute MACD. Right? Who trades the 60-minute chart? Big boys. So what are big boys looking at? This MACD. What does that MACD tell them? You're trading to the upside. Oh, so we mark it for you so you see it. There it is. You're officially trending to the upside. Does anybody want to sell this when the big boys just got their signal that they are now buyers officially? See? Now, you don't want to do that. So we bring that down to you right here. So this chart is why we couldn't do it on MT4. Right? Traders are lazy. If you give them a 5-minute chart, they're going to trade a 5-minute chart. Right? How do you compare all the information you need on a 240 and a 60 on MT4? You can't, because you can't bring the information down. You can't. So that's why we kept going. We can't do it on MT4. Then we had to create our own charts. That's why these charts are amazing, amazing, amazing. All right? Because we're going to keep you out of a lot of ditches that you would go in anyway. All right? Because the information you're getting, only thing on here that's 10 minutes is the 10-minute candles themselves. All right? So we're on a 10-minute chart, and you're looking at this, nothing on here but those candles is 10 minutes. There's a T3, 30-minute. There's a moving average right there, 30-minute. Here's a 60-minute moving average. Here's a 240 moving average right here. There's a 60-minute MACD. Right? Yeah, ditches and gutter balls. Right? So we now know the Aussie is trying to move to the upside, all right, because we have convergence to the upside. So what should we anticipate? We should anticipate that move and maybe up to here. We're converging to the upside. All right? That's what's happened. We've had a zero-line break right here. See? Where's the MACD, the moving average? Inside the histograms. You see that? All right. So don't want to get bogged down here. So let's get going here. This is pretty easy stuff right here. So one more thing. All right. No, I thought we just looked at it as convergence. Let me go back and look at it again. $60-minute chart. Yeah, it's divergence. Yeah, divergence. Sorry, Benny. It is divergence. All right. That doesn't mean we don't stop trading this way. Don't forget that. Just because of that, that doesn't mean anything. What is happening over here? Is the MACD following the candles? See that? All right, you see that? Right here, the MACD is following the candles. All right. This has been a long protracted thing where they haven't moved. They moved down here a little bit. So this right now could be, this could all be over, and this could be the next move. See? Color is because they dip. You know, when they dip, they're showing you when the bears took over and where the bulls have still got it. Right? Pretty easy to see it on this one right here. Blow it up big. Right? So here on the MACD, the bulls got control until this candle right here, and right there is where the bears wrested control. Moving average comes out, all red here. Look at the move to the downside. See? Bears got it. The bears took it away. Bulls tried to get it. Bears kept it. The bears kept it all the way to here, and then they lost control, and this went up, and there the bulls got it. See? There's a battle every day. Bulls and bears. Bulls and bears. MACD will show it to you, right, in a very clear way. So that's what happens. Bulls and bears are duking it out for control of that. Why? The bears got option contracts down here. The bulls have option contracts up here. They're trying to drive the currency to it. All right. So also note the break of the histogram. Right, right here. That histogram. These histograms move with the candles. They're pretty responsive to the candles. But the moving average is a smooth deal. And because of that, the smooth deal cannot keep track of every one of these candles because it's smoothed out. So when you're trending, your MACD is inside the histograms. Right? When it can no longer trend, it breaks out into the open here. When you get the zero line break right here, now you're officially going to the upside. See that? All right? So it is a visual, reticular cognition. Your brain can see it immediately if you'll spend time with the MACD. So is divergence an anticipator? Yeah, it anticipates a reaction to the opposite way. So, but we don't trade it, we just anticipate the reaction. Or is it the case that when you see divergence that it's almost sure that it's going to change direction, or something can change it, or what's the percentage? The MACD wins every time. So what's that mean, John? If the MACD wins every time, what's that? 100%, right? All right. The thing is we just don't know when. We don't know when it's going to happen. It could happen in 15 minutes. It could happen in 4 days. We don't know when. But we're given a heads up because it's a leading indicator. It says, heads up, John, we're going to go the other way. When are you going to go the other way? Well, you got to watch. Maybe when we hit the next target, that might be it. Maybe we hit the top of the trend line, that might be it. Maybe we hit the HSI, that might be it. Maybe we hit the 618 Fibonacci extension, maybe that'll be it. It's about real estate of the day at that point. Yeah, you've got to go find out and say, well, that may be where it is. I'm going to trade it today, but I'm going to move my stop short, tight, when I hit that line. And that's the job of a trader. You major in risk, not in reward. The reward will take care of itself if you major in risk. Divergence helps you manage your risk. That's what it does. All right? It's not tradable. It's a piece of information. All right? So our keyword is reaction. All right? So the reasons to stay in a trade are find the target and then move your stop at the 60-minute roadmap fibs. Don't limit out unless you're going to go to sleep. That's the only time you need to do that, or you break out of a trend. All right? If you're going to go to sleep, you might move your stop, or put a trailing stop on, or just say, you know what, I'm happy with the 900 pips I got. I'm going to click it out, and I'm going to bed. All right? We don't want to talk about hidden divergence. There's no reason to go there, David. All right? So I'm not a real fan of hidden divergence, but so we can complicate things, but why? We try to keep things simple. All right? So the whole deal is to stay on the horse, like a rodeo. Stay on the horse until you ride it to the end. All right? That's the whole point. All right. So let me stop it here and get that's the fib recording. Okay.